Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for the week ending in Sunday, August 18, 2024. My email address is hgsidoc@gmail.com. I welcome comments either in the remarks section in YouTube or via email. The more constructive, the better. I've adjusted these things over the years because of people's comments. When I say over the years, I have been doing this for over 20 years. I do this at no cost. I don't charge for any education services. I do participate in some live education programs put on by others throughout the year, and I have some folks that market some of my indicator packages, including the Wealth 365 Wealth Charts game, who I really appreciate the support that they give me and help me in my posting of these videos on the daily basis at stocksanddocs.com. I titled this Bullish but Not Without Risks. What a great move off of the, whether it was the carry trade or the weak employment numbers 2 weeks ago Friday. But whatever, this market's been an amazing run, and momentum seems to be non-stoppable. We've blown through resistance, and one wonders, do we not go right into new highs this week, especially with Powell hopefully going to be relatively dovish at the Jackson Hole meeting. But let's take a look at what I'm seeing. This is for education purposes only. Anything I talk about should be in the spirit of, taken in the spirit of education and not investment advice. I am a physician. I am licensed with an MD, as an MD. I've got board certification in internal medicine and medical oncology, but I have none of the Series 7s and other things that would give me the right to tell you what to buy or sell. So I don't. This is just education. I don't know your own personal financial position. I don't know what your account size is and what your risk tolerance is, so I couldn't even if I wanted to. I am independent. I have folks that sell some tools of mine, but I do not sell my education. I don't charge for this, and I pay for the tools that I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. As I mentioned, the folks at Wealth Charts is, to me, it's part of the Become a Better Trader family. It's different companies within the same family. Rob Hoffman, such a great guy, great trader. And stocksanddocs.com is a website they set up to post my daily videos. If you like this video, but you're thinking, I wish it was 10 minutes or less, go to stocksanddocs.com. Monday through Friday, when I'm not traveling, I'll post. Major markets tell a story, so there's a lot to see here. First of all, you look at the 5 days. The only thing that was down was dollar, natural gas, and Bitcoin. Volatility was down, and the volatility was actually up almost 10%. Even ARC Innovation, which is a laggard, down 15% this year, was up 6.3. The Qs this week were up over 5%, the Spiders 4%, the Russell 3%, and the Dow and the NYC over 2.7 and 2.9. What a week in the markets. All of these were up on Friday as well. What a rally. Blitzing, which is what my Bichon does when he runs in circles, but blitzing right through resistance. It was just an amazing thing to watch. We had a follow-through day this week, so if you're an O'Neillian canceller, you had a buy signal. Now we know that not all follow-through days work, but you don't get a big rally without at least a follow-through day. Other thing that I thought was interesting is when you look at movement off the lows, you could see in yellow the major indices are up from the high 20s to 40% off the October lows. This is a major bull market. Even the laggards, the QQE equal weights, and the RSP equal weight spiders are up 26-28% since the bottom. This is a great market. If you look this week in the S&P 500 sectors, only technology and discretionary outperformed the S&P 500. Q Edge tool. This is a real-time tool. There's no more, for me, powerful thing than to see how the underlying sectors, industry groups, and stocks are doing versus the index. When they're in concert and they're both going the same way, that's awesome. But when they're conflicting, it gives you a signal. If the market's really green, but the underlying is weak, it's going to come down. If the market indexes are red, but I see strength underneath, often it's going to move back up. So to me, it's been a great tool. If you look at Friday, 91% of sectors up, 62% of industries, 59% of stocks. It wasn't a bad week. The only S&P, this is the 1500, I should have told you that, sector that was down was industrials. If you look over the 5 days, all sectors were up, 88% of industry groups and 82% of stocks. So Friday was actually the weekday, the weaker day of the week, but still, what a strong week we came out of. Look at the last 10 days are strong. Now, last month had some weakness. So we are clearly in a rebounding market. The buckets we'll talk about in a few minutes. These are real-time buckets. My edge rater buckets, which I'll look at because easier to see, are not real-time, but real-time is useful. This is the Q market breadth tools powered by Metastock, and this is a combination of the NYSE and the NASDAQ. You could see the Monday 2 weeks ago opening low, whether it was the carry trade ending or it was the prior week's poor employment. And you could see the market was already heading down. This red sign is a bingo sign. It typically signals a market baby out with the bathwater, and often you'll see a reversal. And this little green thing here is called a eureka, which is an exuberance. So when I see a bottom, a bingo, and a eureka, to me that's a very bullish signal. The circles here and the numbers tell me how much accumulation, and looking at the major indexes, how many were in accumulation. So a very bullish run here, still off of all-time highs. This little green thing, which sort of went sideways on Friday, is telling me that the 13-week new high, new low ratio is getting close to overbought, but is not overly there yet. So something to watch. Now, if I look at breaking out the NASDAQ, nowhere close to overbought, rather. When I said oversold, I meant overbought. And the NYSE is getting close to overbought levels. So, no question there's some risk in this market as we go higher and higher. And you could see that the NYSE has been one of the accumulating indices. If I look at more broader bets, you can see that this line is up at the top on the Dow, so it's overbought. NASDAQ 100 overbought, and then the 500's overbought. The more broader S&P 1500 is close, but it actually eased a little bit on Friday, and the Russell 2000 is not overbought. So we could get to a point where we see the Russell move a little higher, while some of the big caps maybe take a breather as they get closer to overbought. Overbought doesn't mean imminent sell-off. It just means at some point you have to go take a breath. So I say up here, rates ease on Goldilocks data, softer inflation, still economic growth. And you could see that the 10-year on the left was down 1.27% or 0.5 points, and the 30-year was down 1.80%. So rates down, stocks up, great. Jackson Hole speech on deck. Is the recession more of a risk? I'm a little bit more concerned, although I still think it happens after the inauguration in 25. The inversion of the 10-2 is closer again, and as we've pointed out before, this is the reversion line, the zero line, and if you look at when the gray bars occur, they typically occur a little bit after you revert, and those gray bars are recessions. So we probably revert sooner than later, and we probably have a recession coming. Just don't know when. This bothered me this week, where the economic, the Fed diffusion index for Federal Reserve District 3, Philadelphia, softened. And when it gets below minus 20 is when we start to have risk of getting recession. So I think there's a little bit more concern this week. At least I have more concern. Breadth strengthens, but not overbought. Stocks above the 200, stocks above the 40. Here's a full market, 13-week new high, new low. So good breadth, not necessarily overbought yet. The buckets, 57% of the stocks in the S&P 1500 are above the midline. Now let me explain two dates. This is the last market date that this is run on. This up here is the date that I created the S&P 1500. I update them periodically because things change. So over half are above their Bollinger Bands, modestly but not overly bullish. And then over here, there's no excessive above or below, no signal. Now, this is salt in the wound. If the markets are so bullish, why do I have confirmed Hindenburg omens across the board? And you could see on all NASDAQ, on the all NYSE, and then the NYSE Commons, we all have confirmed Hindenburg omen signals. What's a positive is that the number of new lows is going away and the number of new highs is growing. I've been a fan of the Hindenburg omen for a long time. I use it in my trading. And, you know, one question that I have to be aware of or comment is here is the NYSE with an independent person's Hindenburg Omen indicator. And you might notice, you can't always see the white ones, that when we get this omen, it typically signals a top. We've got the Hindenburg Omen. So it's not just an edge rater. It's not just an HGSI, although they don't always have perfect concordance. It's also in independent programs as well. So I'm concerned about that. But again, I got to play the market we have and just be wary. Now, 1 out of 4 Hindenburgs gives you a really big sell-off. The rest could be just sideways or modest pullbacks. This is a what I call the Edge Rater Warehouse Report, and this looks at a big basket of stocks. I look at a universe of $2.50 and 250,000 shares, and I look to see how they impact on ERG. ERG is a combination of EPS rank plus relative strength rank plus group rank. Each of them are 0 to 99. The further to the right, the higher the growth. Now, what you might notice in this light gray line is there are very few stocks in the very low and very high numbers. So I always throw out the tail and the head. What I see is relatively flat across ERG, everything up. Very strong week. And if you look at variation by EPS rank, relative strength rank, didn't seem to matter. There did seem to be some changing of the guard where some of the things that led the prior week did not do as well until more rotation, which has been the theme. And then this is a list of all kinds of things I follow. I like to look at my performance. These were the things I had in Monday, and these are the ones I looked at buying. These are the ones that I liked even more. You can see 6 out of 7 were up. But I want to see how they compare with other things. I want how they compare with the FANGs, how they compare with the S&P 500, the IBD 50. So I basically run a analysis on big lists. Now here's the caveats. It's $1,000 per position. It doesn't look at stocks nor money management, and there's no guarantee that anything I owned on Monday I still owned on Friday. But it just gives me a sense of the types of stocks that I look at. Are they working or are they failing? When I'm red and at the bottom, I know that I probably should not be doing much in the market because my style is not what's in vogue. Right now it's in vogue, but we'll see for how long. Know your news and earnings. Yeah, it's a mixed week. It's not the most news, but you got Jackson Hole, you got Fed minutes, you got other Fed speakers, you got some jobless claims, so it's a doozy. And I think the markets will be waiting to hear how dovish Powell is. Still lots of earnings. As I say down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So markets log solid gains since last Friday. Volatile action that was precipitated by a weak jobs report a couple weeks ago seems to have resolved. We're getting Goldilocks numbers, and even when the numbers weren't great, like Friday, disappointing housing starts and new permits, the market still went higher. As bullish as the last 2 weeks have been, there's still some negative signals. Why do we have recent confirmed HINDYs, the 13-week new highs getting overbought? And even though the weekly timing model is mostly bullish, there's still some cautious signals. Overall momentum suggests we go higher and perhaps threaten old highs. I am mostly long, reduced my cash, but still cautious on position size and stops. Had you taken big short positions over the last 2 weeks, since that low on a Monday 10 days ago, you would have been just destroyed in the market. So as I said last week, I'm not running to go short, even though I think this thing's going to get tired. I got to see the market turn down before I start to put my money at risk to the downside. Historically, whenever I jump it, I'm wrong. Now, That's it for the slides. Just again, my stocksanddocs.com. Now we're going to go move on to the charts part of the presentation. All those slides I did were slides that I basically shot this morning using current data. Just I can get it done much quicker by using the slides. Here's my timing model in wealth charts. If you don't know wealth charts, Rob Hoffman is the proprietor. Best time to buy it is during Wealth 365 events. The next one is right before the upcoming election. It has more stuff out of the box from futures, stocks, options, scanners, a lot of Rob's award-winning tools. And then if you are a educator who wants to have tools available in this product, you have to put some in at no charge, which means you get access to things you probably would have paid for elsewhere. So I like the program, love the program. I'm very happy to be working with them. Here is the S&P 500. Here's what's interesting with my timing model. It went into a buy on November 6th, that week. It has not come out of a buy since then. Last week, we verified that we had not closed below the WMA. WMA was 531.17. The close was 532.99. So to flip out of this buy, I've got to close below the WMA and have a red bongo. So I've been in a buy signal nonstop on the spiders. It's worked pretty well, hasn't it? Yeah, that bongo tells me to be careful, but it doesn't flip me until I close below the WMA. If I look at the Qs, excuse me, the Qs did flip to a sell signal because they dropped heavily below the WMA. Their bongo's still red. Now they're above the WMA. So yeah, it's still in a sell signal, and that's probably the worrisome one. But I put the yield sign because I think the bongo will flip this week if the week is flat to up, and I don't want to be going short into that scenario. The diamonds went flip-flopped a little bit over the last month, but they are above the WMA and green on the bongo. They're in a buy, and even the Russell has maintained a buy even though the bongo's gone red, because once we got this signal, we have not closed below the WMA. So I got 3 buys. I got 1 caution looking to buy. Hard to be bearish right now. The daily less important, but the daily is bullish across all 4 of them as well. So market timing model says it's okay to be long. It is, a little bit concerning with those bongos, but to flip from a buy to a sell, I need both the price and the bongo to have shifted to the negative. Here is the spiders on the week, and you could see, let's get my days here, Friday, Thursday, Wednesday, Tuesday, Monday. So Monday was flat. Tuesday we got the CPI, gapped up and rallied. Wednesday we got the PPI, nice day. I probably got that backwards. Thursday we gapped up. So let me back. I believe it doesn't matter. The key is Tuesday, Wednesday, Thursday, Friday. We had 2 big gap ups, opening on Tuesday, the opening on Thursday, and then Friday we had a nice rally into the close. Did not sell off at all. We end the week on a high. What a strong week. This is the spiders. Look at the daily. What do you see here? We took out, let's just look at what we took out this week. We took out the 50. We took out this high, which had been support and resistance. And there's clear sky above us. We took out this trend line resistance. We've got a bunch of, well, they're not both wealth signals. One's going to be an EMS. Sometimes my EMS signal flip-flops. No, it still says a triangle. So, well, we got wealth signals. So wow. That's all I could say. It's a wow week. And closed at the highs, up only 0.22% on Friday. But if I look at the weekly, and you can see just off all-time highs, up 4% on the S&P. Bullish. Let's look at the Qs. Took out trend line resistance, took out this area that I thought might be support or resistance rather because of prior gap and prior support, took out the 50, took out the trend line, clear sky above, bullish, up 0.13 on Friday, but if you look at the week, still off prior all-time highs, but up 5.47, bullish. Now we can look at the diamonds. They didn't have as much resistance to get through, but I guess you could have, and I don't think this is a very important line, I just felt like drawing it. I guess there's probably a line there, maybe still above it, but yeah, I guess you have 3 data points. But what a great move, took out the 50 with no problem, so maybe a little bit of potential resistance right there. So diamonds on Friday were up 0.21, but more importantly, if I just throw up a weekly very quickly, and then I'll put it back to daily so I don't forget, you could see up 2.93 on the week. What a super week for equities. Wow. And if we look at the Russell 2000, off of its lows, broke through the 50. I think there still could be some resistance. Certainly up here I put it. I probably might even move that down a little bit. I think that this is the next area that I have to be concerned about. But it closed right at that prior resistance, up 0.26. And again, if you want to see strength, look at the weekly, up 2.97%. So a lot to like on the major indices here. Markets are strong. You got to believe the VIX is weak, and the VIX on the week, closing near the low of the week, was down 27.34%. And the dollar was actually down on Friday a bit, maybe because of the housing starts. But overall, if we look at the dollar from a weekly perspective, you can see the dollar reversed the strength of the prior week, and the dollar was down 0.5% on the week. A weak dollar should support some commodities. It should also support the stock market. Commodities, gold, if it's not at close to all-time highs, up another 2.24%. We've obviously been very bullish gold here. Silver, not as good as gold, although it was up the same 2.2, below the 50. Gold is really in uncharted territory. Let's put on monthly for gold. Let's put on, I bet we can get quarterly somewhere. Well, on a monthly going back to 2015, gold is at an all-time high. I think that's enough to say that gold is doing really, really well here. Oil struggling between the 50 and 200. It has to worry about growth concerns and utilization. And then the 10-year really didn't do much on Friday. I already showed you the 10-year was down on the week a bit, sort of consolidating here after well off of its previous highs. So you got weak dollar, weak 10-year, very conducive for the market doing well. The breadth, just looking at a couple of things. I like to look at performance of the equal weighted spiders, which were strong here versus the spiders. So the spiders dominated the equal weights this week. Equal weighted Qs did well versus the Qs here, but this week we saw a resurgence of the Qs. Okay, the IBD 50 small cap growth versus the FANGs more large cap growth has been dominated by the FANGs. Now, 2 things I like to look at. This is TLT versus SPYs, and let's put monthly on. And the reason why I like to look at this on a monthly basis, well, I guess I just need more data, is because if we have a recession popping up, you'd expect to see, let me go back, all right, we got back far. So 2003, 2008, 2020, periods where the market had turmoil, often accompanied by recessions, you saw bonds outperform the spiders. Not happening here. So I don't feel very worried about an imminent recession, but I like to watch that. And here is credit tightness. And again, during times of market bad, here was 2020, here's 8, 9, you see that the spike, and we're not spiking here either. So no signals here that are concerning, despite this little bit of a modest move. There's not a whole lot of difference there compared to when it's a meaningful change. If we look at gamma charts, major indices are all above their multiple moving averages. The Russell's the one with the most confusing here, but notice they're fanning out. That's strength in the market. Next one I look at are the S&P sectors hourly. And we already know because I already told you what's working. Technology and discretionary. And the things that were super strong last week, communications gave up some. And we could see real estates come down. In fact, this is good. Staples, real estate and utilities, and healthcare, the defensive places, have weakened. Now, this is in relationship with ratio charts to the spiders. They all did well, but compared to the spiders, we got technology, discretionary, and probably financials are some of the leaders. And within financials, let me just show you something. Let's see how this looks. Let's create one. Let's look at, these are hourly charts, so let's make that an hourly chart. Well, that was a lot of stuff showed up there. I don't even want to think what's going on there. And I want to make this, let me just make this a clean chart. So let's take off everything. You know what? Another way of doing that. Let's duplicate this chart so I don't have to worry about changing everything. Put that up here. And what we're going to look at is KIE. And notice I'm not going to use the tasty trade one. I'm going to use the built-in one, and I'm going to flip here. So KKK here, that's not what I wanted. Let me try this again. KIE, didn't want to make that ratio chart. Let's just plot KIE. So KIE looks really good here. And insurance and gold stocks dominated the things that I'm looking at to the long side. Now let's turn that into a ratio chart. I do that by typing in SPY, finding the one that is built into the program, so this one here, doing a ratio chart. So I can see that financials and insurance both look strong. I thought insurance might look even stronger. Regional banks also look good. So the ones that we're going to be interested in, technology, discretionary, financials, are the ones that are outperforming. Okay. Next thing I do is I go into I call it my stock scanners, but let's start with the heat map, looking at the S&P 500. Great week. That's not to say there was no weakness. And just one thing I throw in, there's not much after hours trading on Friday, but this heat map is through the after hours session. So let's look at some of my favorites. NVIDIA. NVIDIA broke out above the 50. I talked about buying it last week. It's got a launch indicator. The thing about NVIDIA, where NVIDIA goes, I think the market's going to go. And we've got earnings coming up soon, and that's the caveat, but you could still get a little bit of a move before earnings come out. I think NVIDIA looks great. Tesla also retook the 50. I've owned the cars. I just got notice that my Cybertruck is almost ready. And maybe I should own the stock. It's setting up here. I like buying things when they break above the 50. So that's improved. Meta has been the true leader. I don't know if this has got a problem here with double tops, but it seems to be stalling out where it stalled out before. So that's something to watch for. Apple has broken above its 50. Looks nice move. I'd rather buy it on pullbacks or closer to that 50. Google fell with a lot of talk about breaking it up. Probably the laggard right there. AMD, which, why do I draw trend lines? Because they work. I mean, this is an old trend line that I had on AMD from prior lows, and it traded down to it and closed above here and bounced around it, and now AMD looks like it's joining the party, but it still has to get above the 50 for me to get that excited. What else? Microsofty, well below the 50. Here's what happens to a AI play whose earnings were not great. They weren't, well, first of all, let's talk about what's not great. Um, 6.25 versus 351 is great. The problem was the estimates were 8, so they missed by 22%. And that's why we got to be careful because NVIDIA, if the earnings beat and they don't say anything that scares anybody and the delays on their next generation chip are not as bad as was thought a couple weeks ago, this could take the market much higher. But if NVIDIA trips, what's it going to do to the market? And Amazon, like some of the others, is struggling below the 50 but heading higher. So a lot of positive movement this week. I think NVIDIA looks the best of the bunch. If I look at Wealth Scanner, now I was bothered during the week because nothing was getting above 800. Let's see if that's fixed. Nope. And I don't mean fixed because it's broken. It just means that the market is not as strong as it might appear. And what's been leading? Dividend payers, real estate, dividend payers, real estate, pharma, healthcare, staples, aerospace and defense, dividend payers, utilities, dividend growth, value. And notice we're now getting down to 740. In a strong market, everything up there will be above 850. Now, why are some of the leadership there, like staples and real estate, different than what I showed you in the ratio charts? And I think the ratio charts are just short term, and those are a little bit longer term is the difference. Now, the way I like to sort through the markets is I like to look for pullbacks and uptrends. Those are the things that I have done the best with in my trading career. And I don't like buying things that are extended. So I have a numerical tool. You can see this is just for example, iShares Trust, MSCI USA, major highs. But look down below at this thing here. It says 100. That says it's the most extended it's been going back at least 200 bars. I don't want to buy things that look like that. I'd rather buy things that are pullbacks and uptrends. So let me look at my list for this week. I'll give you an example. GPS, gap. Pullback, broke out of the 50. Had on Thursday is when it showed up to me, had volume breakout momentum coming out of a squeeze. I like the relative strength to be above the moving average, this relative strength versus the spider of the instrument. I like to see OBV being above as it is here. It's not so much here, but I want things that look like that. I want things that look like, let's see, show you another one of the pullbacks. I think INSM is one that I like a lot this week. It's not a pullback at a bottom, but here was a strong uptrend, a pullback to support, and look at what it did on Friday. Took out, first of all, it pulled back to the 50, touched the 50 on Thursday, broke out above the 17, volume breakout momentum from a squeeze, relative strength and OBV are above their moving averages. These are the things that I like to buy. Now, I would have rather bought down here with the big gap up day and the launch indicators, but if I'm just finding it now, that's a pattern that I like. So I want to search the markets to find them. So let's start with gold. I don't know if we're going to find any gold pullbacks because gold has been running and gold is at all-time highs. But we did identify that gold and silver look good. So anything, and I rank these by the dots is how I typically do them. And it's not being nice, it's not auto sizing, so let me size it here. So this is a scanner. First time I ever had a scanner like this. Rob Hoffman created it for me, which allows me to look for patterns. And the pattern I have here is you had to have a long-term bongo, which is your weekly trend. Your daily trend had to recently reverse. This one has not had the daily trend reverse. And then you had to have some of my impulse dots, which are gaps, volume, breakout, and momentum. So the one that comes up here is AU, and I think I talked about it one day during the week. Now, the challenge with the gold stocks is they've had big runs. This thing is above 95%, so I might be a little bit concerned about the extension, but that's AU. Goldfields is not going to be extended. Now, this is not nearly the stock pattern of the recent ones I showed you. It has not taken out recent highs. You could probably draw a trend line through here that I like to see it take out before I get excited. Um, Here's one I do like, Kinross Gold. Kind of looks a little bit like that second example I showed you. Big uptrend, pullback, a little bit of a pullback here, and on Friday it had a breakout signal. Relative strength and OBV look good, not extended. So yes, there's some gold, and Kinross Gold might be one that I look at. There are others that I saw that I liked as well. Um, One of the bigger gold stocks is Barrick's. I guess it was a merger because it used to be ABX. And you could see a wealth signal come here, and EMS here just took out this trend line resistance, great volume. Look at this 4 dot move. That's what got my attention. Now it's getting extended here, so that's a concern. Relative strength and OBV look good. And another big one I like is Newmont Mining. So I've got to be nervous about the extension. Here's one where it's at 88, so I still buyable. I don't buy above 95. Relative strength and OBV look good. And this is Newmont Corporation. So there are nice looking gold stocks, big ones and little ones. Um, I've also been long for quite some time, which has done fairly well for me, Eldorado Gold, and it broke out to new highs here as well. And not extended, relative strength and OBV look great coming out of a squeeze. That one looks good as well. So gold looks good. Now I've mentioned insurance. So I've made, if you have wealth charts, you got to create these yourself. Um, but I've made little groups that will look at various industry groups and sectors. So GL, Global Life, shows a pullback at an uptrend. I don't like that one because it's below the 200. So I know that if I go to MOBO up, I eliminate the pullback piece and everything in the group that has a bullish signal. So Principal Financial Group, don't like that one either. Which ones do I like in the insurance game? Let me look at my list here and I'll tell you a couple of them, or at least one of them. Oh heck, let's just go into the group. Go into watch list. Let's make this insurance. So there's a large group here, Arch Capital Group, uptrend, pullback, breaking out here. I love this one. Coming out of the squeeze, relative strength OBV looks good, not extended. So that's one that I looked at. Allstate. Allstate really liked some of the numbers about insurance and the inflation data. This one has just been super strong, as has much of the group. It had 3 dots here. Um, did nothing on Thursday. Friday was up again. I like Allstate. Brown and Brown, straight up. Is it too late to get in? Well, it's not above 95, but there's no pullback there. Cincinnati Financial had a big pullback here and now running. Lots of these stocks look good. I mean, I'm looking through. I mean, Chubb. I mean, I'm only through the C's. Chubb is something that we were looking at not too long ago. So there are a lot of good-looking insurance stocks. Here's W.R. Berkley also breaking out. So I looked at a number of insurance stocks this weekend. Regional banks. So we could look at regional banks, and let's just look at banks themselves. Let's go back to the CAT scanner, and now let's look at banks. If I don't have banks, we're going to look at the financials. And let's rank them by dots. And let's go back to my pullback and uptrends. So only 1 dots here. AGNC investment. Kind of messy looking. Probably don't like that picture. Avalon Bays is a housing REIT. What a move. Great move. I'm not sure it's a Bible thing right there. FTAI Aviation. This is great. Pullback running again. Now, I don't know what to do with something like this. This thing's been beat up. It pays a decent dividend, And I guess this one's going to benefit if rates go up. This is NYCB, New York Community Bank Corp. I just put that out there for interest. All right, so let's go and look at all stocks, or let's look at my weekly combo list, which I'll post in the remarks section. And it only is good if you have wealth charts, because there's a way to import the code. If you don't have wealth charts, sorry, it doesn't help you. Let's rank by dots, and these are all pullbacks. Let's see if anything looks interesting. H&R Block, you know, doesn't it had a big gap up, closed at the bottom of the gap, massive volume. It's extended. And you know what happens when you buy extended stocks? Well, three things can happen. Let's talk about that. One, the world loves it. All right, so you try that again. Drawing, freehand, freehand. The market loves it. It goes straight up. That could happen. Two, it digests the gains and doesn't do much, and then it goes straight up. And this is the bullish signals. Or it says, well, that was too much, too fast. Let's consolidate with a flag. Here's your pennant. And then let's break out here and go higher. So I typically don't buy the day after this happens unless the market shows significant strength and it moves higher. My expectation is I'll let it quiet down some and look to buy it with the flag. And that happens more often than not. So I probably wouldn't chase that. COGT Biosciences. Don't know anything about this company, even though I'm healthcare. I like this chart. Clearly it's been in an uptrend. Just look at the weekly. Earnings came out here. It's a biotech preclinical. I don't expect it to make money. It didn't. But something happened here. Up, pullback, got a wealth signal, which is my early movement signal. Not a wealth signal, rather an EMS signal. The wealth signal are the circles. So you got my early motion signal, great volume breakout momentum from a squeeze, just reverted on the bongo, not extended, relative strength and OBV look good. I like Cogent Biosciences. The next one here is Spider Gold. Do you want to buy gold or gold miners? This chart looks awesome. And you could see had gap, breakout momentum. So you could be owning gold. JD, the Chinese stocks were a mixed bag. And this is one who had earnings, $1.29 versus 83 cents, a 55% beat. Over the last 2 days, it's had 1, 2, 3, 4, 5, 6 dots coming out of a squeeze, not extended, relative strength OBV. This is beautiful. This is coming out, breaking above the 50. I like JD a lot. Marvell Biosciences. So kind of sideways move. Remember I talked about what happens with a big move up? This happened back here with big volume. And I said it might pull back before it runs. Well, it took a long time to run again. But it's breaking out here on massive volume. Earnings are already out. And again, it's clinical, so they don't make any money. Aspen Angels, they make housing products, I think, wood substitutes. Big uptrend, massive pullback, massive dump, all the way down to 200. People lost faith in them. Then their earnings came out. Earnings 21 cents versus 4 cents, 21 versus 22 the prior quarter. I bet this thing goes higher with that earnings report, like this one. So do you notice how I have a simple scan? And for those that have my tool, here's how you make the scan. Put your price and volume in. I like 5 and 500,000. I like to have option liquidity. I'm not looking for liquid. I'm looking for stocks that have options. So greater than 0. I want at least one bullish dot and no bearish dots. And I want a reversal from a short-term bear to short-term bull within the last 9 bars. And I want both my weekly bongo and daily bongo today to be bullish. That's the scan. Here's a list of stocks. And I rank by dots. And these are great stocks I'm showing you. Look at Anglo Gold Ashanti. We already looked at this one and said maybe too extended at 95.54, but beautiful stock. This is one I don't know. It is a old biotech, and I looked at some of the news, and I can't tell why this thing got so excited, except they've got earnings coming in the next quarter and a stock that starts to make money. Let's just look at it in Trading View, AUPH, and look at their earnings, where they've been. AUPH. So here's a stock that back here, I guess, missed earnings and the stock died. And the stock has been going nowhere since February 15th-ish. Then look at what happened off of this trend line, automatic trend line on Friday. A big move up. All right. Come up here and we see August earnings, 113% growth, 20% surprise. Revenue, 38% growth, 5% survive. Next earnings are October 31st. I don't see, let's see what happened here in the news. All right, so this is about changing the board. That's never a good thing, but the fact they beat earnings and revenue, and if I look at one of my other sources of truth, let's actually go to their earnings page here, and let's see what they're projecting going forward. And let's look at earnings, and they are looking at, these are 24. So this is looking at, let's see if I want to do this. So revenue growth is growing. Earnings, they're not giving me the next couple of quarters. Bummer. So this stock might be a turnaround play, and maybe the story is it's starting to make money. It's a cheap biotech. It might be worth looking at. Cooper Companies, old name. Things been in a downtrend for quite some time, so it's not really a pullback, although in an uptrend, a short-term uptrend here and a pullback. Breakout above the moving average with momentum. Relative strength lagging. Probably would pass on that one. This is another Chinese ADR. Don't know anything about this stock or this company. Big gap up. Is it getting ready to run again? Goldfields we looked at as one of the cheaper gold stocks. Packaging Corp. These things don't do well in recessions. Nice uptrend. Here's your pullback. Got big volume breakout. It doesn't say earnings came out then. What were earnings back here? A little bit of a surprise. So this is what I do for my weekends. DHI is a housing stock. Um, the permits were not great on Friday, but look at this run up. But if Kamala wins and she gives 25,000 down payment assistance for new houses and wants to build a lot of new houses, maybe someone like D.H. Horton that does some of the cheaper stocks, D.R. Horton, may benefit. Halo, pick up a couple others that I like here. Halo is a interesting drug company where they partner with existing products. They make them better, but when they make them better, they also end up extending the patent life. Its earnings runway is huge because of a drug called Darzalex, which J&J sells. That is just a major blockbuster. Yeah, you would have wanted to buy it down here. I think it's running again. It's a little extended. Relative strength and OBV look good. I'd like to look for Halo on pullbacks. And I think and then another Chinese stock that I like a lot is PDD. I have a position in this one, and this one is running. I found it here when it took out the 200. This was another opportunity taking out the 50. Those triangles are a Rob Hoffman launch indicator. They don't come often, and when you see them, you pay attention. So I've now looked at the markets from a top-down perspective. We looked at insurance. We looked at gold, some of the leading places right now. We looked at, from the bottoms-up perspective, just ranking and scanning for leading stocks. We found plenty that look interesting. I do think we need to be aware and careful of where this market is, because we are talking about a market that has been running, and a pause to refresh is never a bad thing. And again, those Hindenburgs are something that I'm going to be watching. So have an awesome week in the market. Please leave comments. I know these are long-winded, and I don't market them too much. So if you click the thumbs up, it helps me to get noticed. Have a great week, and thank you.